Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for July 10th, 2017. Happy Monday. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to remain within balance here, trading within this range that has developed from 2400 up to 2450. We still have those rounded top qualities here. Again, anytime price is sitting right at the center of the range, very difficult to find an edge in that zone. Much easier to fade the edges out at the extremes of the range. So not a whole lot to do at the moment here from my perspective, but something to watch out for, because when we are at the middle, there is an opportunity to see a push to an edge, and that allows you to fade it back toward value. So right now, kind of stuck at the middle, still watching 2400 overall. Nice rounded qualities. We'll see how this thing continues to develop throughout the rest of the July. If we look at the intraday time frame right now, what you'll notice here is the first move up was off of the previous week's close here. Big push up, 25% expansion of the previous session's range, and then back down to the close. So the first move up and rejected back to the close, and overall that's kind of the range right here. We have this 2420, which could provide a little bounce back up, and then up here 2430 could provide another push back down. So that's kind of the little range to play off of at the moment. Let's take a look at crude oil. In crude oil, I mentioned before, there was an opportunity to look to defend and push to back toward higher value, but that's starting to fade quite a bit now. After this session here, the bulls really had the ball and were ready to rally this thing, but then by the end of the day, they had dropped the ball, and that was an indication that we were likely coming back to test 43.75 and perhaps break through it. And now you're starting to see price hold right on it, and to me it appears that this zone isn't getting quite the rejection that we expected, and we knew that right away. Over here there was no real rejection that we were working off of, but it was an up move underway, and the pullback has not seen much of a rejection. We did at one point, but it really hasn't followed through. So this appears like it wants to push back toward lows. That's back toward 42s, perhaps even in the 40. We have key level here, which is a CLVN at 40, which could provide a big time, first time bounce opportunity. So right now, just watching this, we're in a short-term downtrend, lower highs, lower lows. Day over day, that could lead to a push back toward the recent pivot low of about 42. Again, nothing very actionable right now, just showing a little bit of forward-looking analysis here, because we could be looking at another round of new lows soon. From a short-term intraday perspective right now, crude oil has been trending lower. It has sold off from the previous week's close. So if you look here, price held above the previous week's close Sunday evening, but even Monday, and now we've seen this thing sell off. Lower highs been offered, and now we see a range that is formed at these lows. So short term, it could be a fade the edges off the shorter term range with a downward bias. So any pullback into 43.95, 44 could be a selling opportunity for new lows. Above 44s, we'll squeeze back to 44.33 to 44.40. Let's take a look now at the NQ. Here's a look at the NQ, the higher time frame NQ. We're still in the larger range. This is the range we talked about before. This is the impulse move here. 59.07 half down to 55.50 half. I mentioned before, this is likely the range we're going to carry into the most of the rest of the summer. Any push to an edge, even if it were to come down below this edge, would be a fantastic buy opportunity back up to fade it. We still have a very, very bullish market overall. And we haven't really had a rest period since March here in early April. So this is a nice range where it's building energy and allowing the market to find balance and trade off that range. So right now, again, at the moment, nothing super actionable right here. We came very, very close to finding the edge a little bit before, but there are some buy stops here above 5,700, which could lead to a move back to 5,800, but the current trend within the range is down, so any failure to find acceptance above 5,700 could offer an opportunity to find the edge and then bring it back up. So again, just looking out into the future to see how this thing may play. because right now it's quite difficult to really get a great read off of this range at the moment. Let's take a look at gold. Gold futures, I mentioned before, 1230 was the big level here after pushing down below it. Very similar to the last couple times we were below it, but it needed to get above 1230 to start to push this thing back, and instead we got a downside push, and we're still at the edge of this range. I mean, this is still a large trade range that's playing out, and until we find rejection off the lower edge, we're still seeing a downward price discovery phase. So at some point we may see rejection, and that would be the opportunity to bring this thing back toward value. But until we see that, it's still a downtrending market. Sell the rips is the best opportunity right now. And watching the previous session's midpoint here, that Friday mid at 1217 will be very important. That's where bears are trying to keep a lid for a shot at new lows into 1194.5. All right, that's it for now. Let's see how this plays out heading into the rest of the week of trading. Good luck and trade well.